What is going on, everybody? Welcome back to yet another bootcamp video. Today we're going to be going over liquidity. I'm going to be showing you what is liquidity, how to identify it, and then there is going to be a part 2 where I'm going to be showing you how to trade with liquidity. But real quick, as always, before we hop into this bootcamp video, as always, if you guys are still rocking with me and you guys are still dedicated to making it all the way through this bootcamp, comment down below doing your daily check-in. While you're at it, also make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Alrighty, so what is liquidity? Liquidity is basically orders being filled in the market, right? So as long as orders are being filled, there is liquidity. If no orders are being filled, there's no liquidity. But the trick to trading with liquidity is being able to identify where are these orders going to be filled at. So these orders can consist of many different things. They could be stop losses being hit in the market. They could be limit orders being filled in the market. They could be market orders being filled in the market. So if we're able to identify one, where stop losses are being hit, two, where traders are entering either at a limit order or a market order, we can identify an area of liquidity. And I want to show you guys a really good example. So pretty much when it comes to trading with liquidity, the way that I use it is simply I only mark these levels on like a 5-minute or a 15-minute, and I'm simply just looking at previous lows or previous highs. That's where I notice the highest probability liquidity trades end up setting up. So again, it's either going to be on a 15-minute or a 5-minute that I mark these points. But there was a really good example this morning when I was live on my YouTube channel. Now, I do go live every single morning, 8 a.m. Eastern time, and give you guys a completely free watch list for the day. If you guys aren't tuning into those, definitely highly suggest you do so. But if we're looking at NQ this morning on the 5-minute time frame, what do we notice? We start basing out down at this low right here. So as we see, price comes down, tests this level at 15,159.50, bounces up, comes down, and it sets a higher low. What is this suggesting to us? Buyers are in the market. Again, if you guys have watched the price action video, this is a solid buyer's candle right here. They push price up. Notice how price comes back down and we have these nice lower wicks. What is that suggesting? Buyers in the market. So if people are getting long right here and getting long right here, where do you think their stop loss is going to be? Right below this low right here. So that is one area of liquidity, possible stop losses if price were to break below it. Now, also at the same time, what you're going to have is people who are trying to short below this low right here. So as price comes down and it dips below this low, stop losses are being hit and traders are either having their limit orders filled to go short or they're market ordering to get short, right? So we have an area of liquidity. Stop losses being hit and traders entering short. Lots of positions being filled, creating liquidity. Now, when those traders are going short, where are their stop losses going to be? If price starts to reclaim the breakdown level. So these people who were getting long over here got stopped out right here. As the traders got short and price reclaimed the level, what happened to them? They got stopped out as well, creating enough liquidity for the market to then give the next leg up. So that's just one example of what liquidity is going to be. Now let's head on over to ES. Let's look at another example. We could actually look at this one from yesterday. So if we're looking at yesterday and we head on over here, we had an area of liquidity, right? So as we can see, price pushes all the way up into this 45.01 area in the overnight session. And if you are looking to learn more about my overall day trading and swing trading strategy, how I find bounces, rejects, support and resistance, price targets, Fibonacci, all the indicators I use, and so much more, make sure to check out my 450-page book on Amazon titled The New Age of Technical Analysis. Tons of amazing reviews. Definitely make sure you guys check out the reviews. But if you are interested in learning more about my strategy, make sure to check out my book, The New Age of Technical Analysis, on Amazon. The link will be down in the description. As you see, price comes up, pretty much double tops up here. Right now, to me, this isn't necessarily considered a liquidity sweep. I would see this more as a double top. But as traders got short at that double top, where do you think their stop losses are going to be? Right above these highs, correct? As we see, price pushes up, hits the stop loss orders. More than likely, what are other traders trying to do? They're trying to long the breakout and catch the next leg up. Where are their stop losses going to be if price starts breaking and reclaiming the opposite side, right? So we have these sellers having their stop losses hit, and then we have buyers trying to push price higher having their stop loss hit, creating enough liquidity for then price to start dropping to the downside as both sides are stopped out in the market. Let's look at an example that actually ended up playing out today, and this is a trade that I ended up taking. So looking over here on the 5-minute time frame, price actually came down to 45.59 all the way over here. This was a very important level, and as we can see, price dropped all the way down to this 45.59 on Friday, right? So that is an area of liquidity. This is the lowest low of this pullback that we have had recently. So that's going to be an area that we want to pay attention to, right? So as price starts trading down towards this area, what do we notice happens? It breaks the opposite side of that liquidity zone, 45.59, and then it reclaims the opposite side. As a result, setting up for a high probability trade to the upside with your stop loss right below this low. And that is exactly what I was seeing going into this trade. This previous low at 45.59, I was looking for price to grab liquidity, reclaim the opposite side to then get long and catch a nice move to the upside. Let's take a look at some other examples. Again, I'm just on the 5-minute time frame right here. Here's a really nice liquidity setup. So as we can see, in the pre-market session around, 7:50, we ended up setting this low right here. And again, I talked about this one live on my live stream in the morning. As we see, we had some news. Price broke below that previous low. Again, more than likely, traders went short. Any traders that were long got their stop losses hit. And as price reclaims that previous low, the ones who were trying to short ended up getting stopped out of their position, again, creating liquidity in the market, and price ended up pushing all the way back up towards that news high, and actually even higher after that. Sure enough, doing a nice liquidity sweep to the upside. As we see, this was that previous high point right here. Price tried to trade above it, ultimately failed, creating liquidity. And as we see, price made a move all the way back down towards these lows right here. As we see over here, we set this low in the morning. Price ended up breaking below it, immediately reclaiming the opposite side. Any traders who were long near this level more than likely got stopped out. Any traders who went short, where's their stop loss? Right above these highs right here. As price reclaimed the opposite side, both sides of the market ended up getting stopped out, and then they moved price even higher. Same thing over here. If we're looking in the overnight session, we can see that we set this nice high point right here. As we see, price ended up pushing up into the area, maybe hit some short stop losses, and then also traders who were trying to get long were trying to long the breakout, creating liquidity, both sides of the market getting stopped out, and then made the move all the way down into this liquidity right here, the pre-market low. Any trader who was looking to go long, any trader who was long over here, where's their stop loss more than likely going to be? Right below this low. Any trader trying to short the new low of the day break ended up getting stopped out, creating liquidity, and then creating the next move to the upside. Then as you can see, it came back down later in the day, retested it, created more liquidity, and then they ended up pushing price even higher. So again, pretty much what I am doing with liquidity. And if you go onto a 5-minute chart, you're going to notice that this literally happens like almost every single day that we start getting these liquidity grabs. There was even another one right here. We have this low, price breaks above, fails to break above, creating liquidity in the market, and then they made the next leg to the downside. So you're going to notice that this happens a lot in the market. So your homework is going to be going onto a 5 or 15-minute chart on the NASDAQ or S&P futures and back testing this strategy. Again, it is super accurate. All you need to do is look for previous high and low points. And what you're looking for is failed breaks above or failed breaks below an area of liquidity. Now, when that happens, you're looking for both sides of the market to get stopped out. And with that, all you really need to understand is if you were a trader in that scenario, where would your stop loss be? And if you can conclude that, okay, there's more than likely sellers getting stopped out and buyers getting stopped out at this area, that sets up for a high probability liquidity spot. Make sure you guys do your homework, because tomorrow we're going to be having liquidity part 2, and I'm going to be showing you how you can trade these areas. And then here's another example. Again, they are literally everywhere. So make sure you guys are doing that homework. But as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. If you haven't already, make sure to do that daily check-in, and I will see you guys tomorrow for liquidity part 2.